through loud and clear. I take it you have eyes on good old Albert there, huh?
Yep, he's looking good.
All right, as always. It seems like he always looks good. He never ages, it seems.
The gray hair and crazy gray hair came out.
Well, happy Monday, Steve. Happy Monday to everybody that showed up today to hear what Steve and I had to say. I hope everybody took the time to recharge and come back with a fresh vigor towards the markets. Of course, today is Monday, the 10th, and of course, a little bit slow today, and we'll talk about that. Steve, I guess, as always, before we get into it, I should probably take care of the legal stuff here. So just want to make sure everybody is aware that we are publishers of information here at Trade Ideas, so everything we share with you here today is strictly for educational purposes. If you do need things like advice on where to invest, how to invest, you need to seek out a licensed professional for that type of service, and they're pretty easy to find at any type of brokerage outfit that you probably could easily pull up on Google. So if you need that type of advice, please seek out a registered individual for that. So I think the lawyers would be happy with that. Onward through the fog. Before we get going here into the meat of the presentation here, we've got a special event coming up, Steve, that should give everybody who is not currently a subscriber a chance to get a peek at the full-on accessibility of Trade Ideas, including the AI and all the advanced functionality. That open house is going on the 17th through the 21st of this month. And for $888, you can get a full 5 days of TI Premium. Steve, we're also going to be conducting that that contest. Yeah. And so, yeah, you wanna handle that one, or you want me to keep going here?
Well, I guess we might as well, since you talked about it. I mean, it's real simple. I'm so glad to see that the majority of the people in the room today are the premium subscribers, because that allows you to collaborate and send in a cloud link on your price alerts. So we're going to have a little fun with existing and open house subscribers during the week. Monday, Tuesday is going to be kind of a study session, but Wednesday evening you'll get an email when the actual picks are due, and you need to send in 5 working price alerts, much like we do on the webinars each week at the end of the day. Just highlight the 5 that you like and submit that cloud link, and then we'll keep track of whose cloud links are submitted and which email. And after 5 trading days, we'll look in there and peer in and see who had the best percentage gain winners on the 5 alerts that were set as working alerts. So they'll come in as working alerts, and ideally they'll all 5 trigger, at some point during those 5 days, and give you guys some good P&L. And whoever has the biggest account on the price alert contest will win a full year of TI Premium. And so that'll be fun. It'll be fun to do, and fun to try and win a prize. It'll be fun to referee as well. We'll all be involved in keeping an eye on that. So it's the first time we've tried something like this. Hopefully it goes smooth. I don't see why it shouldn't. The TI software makes it pretty easy. The rules are pretty simple. Submit 5 of them, and we'll tell you where to submit them later in the week. I believe it's just going to go to info at Trade Ideas, but I know Scott will certainly clarify exactly where they go. And we'll have fun with that. Second place would be another additional full hour of training, which we now charge $99 for. Our growth is so parabolic at the moment that we're having a hard time keeping up with existing customers who want to do their free one-on-ones. So we're not able to offer a second hour of one-on-ones, but we are offering a $99 option for people who really need that second hour. We'll make that available, but in this case it's going to become the second place prize for this particular contest, Jamie.
Yeah, it's going to be exciting. It is the first time that we've ever conducted a contest of that nature, and it'll be interesting to see how many people submit, and of course, in the end, who had the best picks.
Long, short, small cap, big cap, who knows? We'll find out.
Exactly. Should be interesting moving forward. So, for those of you who are not subscribers, perfect opportunity to get a taste of the full functionality of trade ideas and a chance to enter the contest, or not a chance, but you can enter the contest for a chance to win that full year of premium. All right. So before we get on with the lesson today, I just want to remind everybody that we do have quite the vibrant trading community centered around our wonderful technology. So we have the webinar today, the office hours as always on Mondays with myself and Steve, and then moving on to Wednesdays, we've got the Q&A demo with CEO and founder of the company, Dan Merkin, Brad Williams, and then also with Mr. Gomez, Trade of the Week webinars a little bit later on Wednesdays. And then to cap everything off, we have Andy's Trading Studio on Thursdays, and I'm the co-pilot with Andy on Thursdays. So 4 different webinars all throughout the week, all showcasing the power of trade ideas, the AI, the Trade of the Week. So a very good resource collection there for all of you to take advantage of. All right, and in keeping with tradition, itinerary looks pretty much the same. As Steve and I always like to say, you know, the methodology is effective, it's working, and until it ceases to do so, we're going to keep on practicing it. So, market recap, Steve. They're playing your music. Are you ready?
All right, sure, why not?
All right, I pass it over to you.
Monitor 1. All right, so here is our SPY once again as a proxy for the S&P 500. These lines were drawn on Thursday when Jamie was in New York. Andy and I were really highlighting the wedge that is becoming so apparent over the last almost 3 weeks here now. The market action kind of painting itself into a corner until we see a established close outside of these wedge lines, meaning not just a little wick piercing and popping back in, but a nice candle at the closing to the downside or the upside. Then I think we'll have a better idea of what direction we're going. As Andy pointed out, and he is correct, you know, this was a bad break last month, I should say, and these types of patterns are called continuation patterns, so typically they could have a continuation of the break. But when we go over to the tech-laden Qs, we saw they actually broke out today. Let me turn my crosshairs back on. The Qs actually broke out today, which means they actually set a new all-time high today and pulled right back into the range once again. So getting conflicting signals. Again, the SMH, as we showed on Thursday, this is the semiconductor index, you know, led by Intel, showing really nice charts. Back to the Qs with a strong technology weighting, holding above this critical line here. So getting some, you know, bifurcation in terms of what we're seeing. We're seeing strength here in the Qs, but we're seeing some suspect here in the SPY simply because we have this consolidation pattern following after a very sharp break. It's, you know, it's futile to try and guess and predict and say, I'm going to tell you guys with emphatic 100% we're going to do X and go in X direction. I can't do that. I would never do that. I don't want to predict. I just want to have a prepared mind and just realize where the strength is and where the strength is not, and look exactly as to where the footprints in the sand are coiling themselves up into this pie-shaped wedge here. You know, we don't have any major catalysts. We had the Fed meeting last week. We had the unemployment numbers on Friday. Maybe it's going to be some sort of a black swan or a good swan that might break us out of this range. Who knows? But the bias, I would say, the bias still has to be up because that's what we've been doing, and that's what the NASDAQ continues to show us. Not a prediction, but just still kind of a bias just based on what I'm seeing. But we're just not getting any indication. Once again, every attempt to sell off is met with buyers to pop back in. So all we can do is try and corral the price. And one of these days we're going to come in and notice that there's some color above or below these wedges, and that'll give us a bit more of a definitive idea as to maybe which way the market's going. That's all I got for that. You got anything you want to add, Jamie?
Nope, just, you know, the bottom line is when that pattern presents itself, after a while, it has to go somewhere. We know as it coils up and gets smaller and smaller, you know, whichever way you choose to describe it from a trading perspective, NR7, wedge, it just simply means that something is probably going to happen. We just don't know which way it's going to pop.
Yep. Here's our floor. Here's our floor, and here's our ceiling. But in the middle, no man's land, we're wedging into a coil. So still too early to tell. But the cues give us a bit of a bias to keep hope alive for the bulls to move higher.
Absolutely. So let me flip it back around here.
Okay.
And, just want to pull that SPY chart back up one more time, because after we get into the Holly information here, it's no surprise, it was a pretty slow day for Holly. Here we are today with this little bitty bar here, not really an inside day. It could have been. It wasn't any bigger than that bar, but just barely above the previous day. So all we can tell is that eventually, whether it's tomorrow or Wednesday, we should get a little price movement. Now, will that be up or down? Unknown at this point, but when we take a look at the trades that Holly executed today, not a whole lot from any one specific strategy. Obviously, these are all of the strategies made the cut today. We had a total of 12 strategies, 3 of which were short, the other 9 were longs. And let's see, only 4 strategies did not issue a trade today. Nothing from the shorts whatsoever, which is, of course I was traveling last week, so I haven't been able to keep my fingers on the pulse like I normally do. But leading up into last week, we were starting to see more short trades being issued. None today, and just a nice smattering across the board from each one of these longs. So you can see I've got these currently sorted by win percentage rate today. But we can see the busiest strategy was the buyer stepping in with a grand total of 3. So amongst all of these strategies firing today, I only had a total of about 17 trades. After it was all said and done, risk off is showing 33 cents. So not that there's a trend forming here, but eerily reminiscent of last Monday, which was either up or down slightly. I can't remember off the top of my head, but it was kind of a non-event slow Monday as well. Seems like they've been kind of the hangover days as of late, while all the information digests over the weekend, or lack of information, whichever way you'd like to describe it. But once again, kind of a slow day for Holly. However, there were some really good opportunities in there today from the trade around perspective. The MGT was really outstanding, and ATW. So let's just do this. Of course, just want to refresh everyone's memory. Just because a strategy makes the team for the day does not necessarily mean it's going to fire. And once again, all of the strategies that fired today were designed around certain intraday hold times, and we can see those hold times under the time stop column right here. So let's do this. Let's just take the all trades blotter, and by the way, to get that window, all we do is right click within the Holly strategy panel and say view all trades, and then we then have this panel show itself. So I'm going to sort by risk off profit today, and this is the mode that Holly ended up registering at the end here. And so let's see here. When we're talking about a trade around, ATW is a good example today. So I just double clicked on it, and of course the blue arrow here is pointing to the 5-minute bar where Holly called the trade. So I always like to just kind of put a horizontal line across that entry price here. So what are we talking about when we talk about a trade around here? Well, if we look at the risk off column here, we can see that Holly entered the ATW trade, and we look at the reason why she exited the trade over here. Reduce risk. So just to refresh everybody's memory that's not real familiar with the technology that they're seeing here, when we first brought Holly online, there were 3 different reasons why she would exit a trade. Either the stop loss was hit, profit target was achieved, or the timed hold had expired. Well, we would have Holly being green in a position, and the stop loss wouldn't get hit, and the timed hold wouldn't occur, and the position would move against her. So we, in essence, had quite a few trades that were green, that ended up turning into red. And from a trading 101 perspective, that's not what we want to do as far as trading intraday goes. Now, if it's a long-term trade and we've got a longer time horizon, 3-4 day hold, and it's a little bit out of the money, that's a different story. But from an intraday perspective, where Holly is back in cash at the end of every day, we eventually came up with some new parameters, profit save being one and reduce risk being the other. So sometimes when Holly gets into a trade, we can see it never came close to stopping us out, but once the action gets a little bit wicky here, then she'll make the decision to go ahead and close the trade out, as she did with the reduced risk functionality here. But as we always like to say, with our trader's hats on, we get the call right here, stock kind of starts moving sideways, we're nowhere near our stop loss, which is, let's just put a line down here. So Holly cannot read charts. Holly's strong suit is giving us plays with outstanding statistical probability. So if we take the trade here, great, we're going sideways here, but it's always a good idea whether you take the trade or not. Holly issues a trade, and as soon as that trade turns red, we pull up our chart, we find that entry price, and we draw a line, or even better yet, we set a price limit alert like so at that price. So once the stock goes back through the price, we can have an opportunity for an additional entry or to take the first lot that we want there. Because while the statistical probability is good for the day, sometimes the timing is a little bit off. Sometimes they go immediately. Sometimes they do this little sideways action here and go again. But whether you take the trade initially with Holly and add here, or simply set that price alert for the second excursion through the price, either way is fine. If you get into the habit of doing this, it's just like Wayne Gretzky said, the famous hockey player, half the battle is showing up. Half the battle is being there every day, getting familiar with these patterns, and just repeating this process.
Those reduced risk entries are probably one of the better ones to really keep an eye on as far as a trader, because it didn't get stopped out. It wasn't profitable and pulled back as a profit save. It's just an ultra-conservative algorithm that makes the AI realize, hey, I have not been profitable in this trade since the onset, and time is starting to decay. So maybe the call was a bit early. Maybe it just needs to develop a little bit more, and I'm just thinking out loud, spitballing. Those are the reasons for reduced risk in layman's term. So those are the best ones, as Jamie's just showed you, to keep one eyeball on there. Use that entry level, use a price alert to trigger it, because those are the ones that more often than not I've seen are just maybe a little bit late to get started before they get moving.
I could not have said it better myself, Steve. All right, so that was a good example of a trade around, and once again, what we're looking for are the red values and risk off profit that eventually showed up green and risk on. So as you can see, really weren't a whole lot of other ones around, that fit that recipe today, red here with green over here. Now this one, a little bit of money was left on the table. This is more what I would like to call you could have maybe milked another 8 cents. Holly took 8 cents once again, on the profit save functionality. If you stayed in the trade, you could have got another 8 cents. So not a huge discrepancy here. I'd say my favorite one that Holly put out today, of course, not only did it happen to be the biggest percentage winner, both risk off and risk on. So risk off, 10.53%. Nice little entry here. And what is really beautiful about this trade is we get the entry signal right here. I've already drawn the line across from the $1.52, which is the entry price, which is this top line here. So Holly makes the call, and we pull it up, and we're currently right here. Of course, this part of the chart hasn't developed yet. So right off the bat, we have statistical probability in our favor that came from the 5-day bounce. So when we look at the 5-day bounce here, we can see, okay, Holly said she's going to take a position in MGT. So I know that right off the bat, anything that comes out of the strategy, of according to the 40-day back test coming into today, 66.7% expected accuracy today.
That was today.
Or excuse me, that was, yeah, I was realizing that as soon as I was saying it. 60.4. So we had a 60% chance from a statistical probability standpoint, which is great. And then, of course, we can see the 5-day bounce ended up outperforming and coming in with 66.7 on 3 trades today. So the bottom line is this. It's about working with the technology. Holly's strong suit is statistical probability. She can't read charts. Now we can fill the void. We can read the charts. So we're sitting there and we see Holly recommend the trade here, and of course what jumps out to me immediately is that not only is Holly calling the buy here with 60% statistical probability, but what Jamie sees right here, and I've taken the liberty of drawing the second line right across here and even using the wick there. Of course, if you're a purist, maybe you end up eliminating that wick and using right here, but whichever way you decide to go is up to you. So at the same time, Holly calls it and says, hey, 60% probability, and then I notice, hey, it just broke out. That range break right there since the open, I like that pattern. That's double affirmation. So, you know, statistical probability coupled with a favorable chart pattern, I mean, ladies and gentlemen, it just doesn't get any better than this. And this is the perfect example of the man working with the machine. Not blindly following the machine, but listening to what it's telling us. 60% probability, and then this pattern's being met as well. So, as we can see, the rest is history here. And of course, as with so many of these plays that we cover in the webinars that Holly produces, this little micro consolidation here right at the entry point. Sometimes it occurs a little bit before, sometimes it occurs a little bit after, as it did in this case. But once again, a nice little NR7 type pattern. You know, if we look at the very tip here, once again, the whole market is coiling up into a little bitty wedge like this, and then what do we have? We have explosive move to the upside here. So, I mean, MGT was a day maker in and of itself, depending on, you know, how you participated in it, and did you add to the position. And, you know, once again, this little pattern right here is fractal, so after it meanders around right here again, if we wanted to get real specific, there's even one more event that occurs as it breaks that range once again. So a real simple methodology, just drawing some horizontal lines and looking at what is actually coinciding with Holly recommending the play that is statistically weighted.
I love it.
Yeah, perfect little trade on the MGT. Just happened to be the biggest winner of the day, and a lot of good things going on there.
Gave people a lot of time to evaluate that trade as well, the back and forth.
5, 10, 15, 20, at 20 minutes after the signal was still plenty of time, and once you get used to seeing these things occur, that's what it's all about. You know, we've seen this over and over again. It's just about recognizing the same patterns that we've seen day in and day out, and after a while it becomes second nature. So pretty slim pickings. I mean, we did have 17 trades, but you know, when we look at the blotter here on the risk on and risk off, just slightly more green than there was red. So, you know, the market's coiling up. So is the big action going to come tomorrow or Wednesday? We don't know. We don't know. So that's really pretty much all the highlights. You know, there was a little bit of excess left on JKS, but all in all, with a slow day in the market, Holly spitting out 33 cents. But if you really were paying attention on the MGT, could have had your whole day right there. All right, Steve. Anything else any other thoughts rumbling around up there about what Holly did today, or any other plays that Holly spit out?
No, I think that's pretty much it. I mean, it was a very risk-off type of day, very choppy, but we are due for, like you said, you know, a broad-based rally where we either broad-based rally out of that wedge up or a broad-based tanking on the way down. But we only get a few of those days each month. The rest of the days each month are a lot more discretionary and a lot more choppy, like we saw today.
Yes, indeed. So let us move along and let's talk about last week's price alerts. And boy, did this group of price alerts look a little bit different than most of the price alert groupings that we've been handing out to everybody. But this is a great example of what happens and the risk that is inherent with holding things overnight, and specifically the risks that are inherent in holding a certain industry overnight, which is pretty much infamous for these types of moves. In the industry or the sector that I'm talking about, obviously, is the biotechs. So as everybody can see, the price alerts list here, these were all the ones with the exception of this one. Let me just get rid of it so I don't sully the results here. These were all from last Monday, and the one that sticks out like a sore thumb is this one here, ALNY, which this is when we told everybody about it, and there was a brief period, there was a day.
2 days, no, 2 days. 2 days
right,
of alpha
right.
there.
2 days, yeah, because that was the washout, and then 2 days of nice profit potential, because during the week last week, we had a nice multiple green count here, right? So after that 2-day window, and of course we always talk about, these plays right here, there's 1 to 2 days, and that's what Steve typically recommends. But boy, after that, what do we have, Steve? We had some bad news on a biotech stock.
Yeah.
And
when
then
people ask what can I do to mitigate my risks of overnight holding stocks overnight, really the first and best only answer you can give them is be very, very cautious with biotechs. So.
And the reason behind that is, it's all about drug approval. And one bad FDA result causes what you see here. A stock literally cutting in half. A lot of people probably were looking at this and going, okay, 70, 35, well, they must have done a 2-for-1 split. Well, unfortunately, that's not the case. It just literally cut in half because one of their drugs went wacky and did not do what it was supposed to do. But once again, that's typically the perils of holding biotechs overnight. And once again, from the culmination of all of these positions, we can see the chart here. There was profit potential for a few days, but if that was not locked in, then we had this guy gapping down 50%, which if you hold things overnight all the time and you've been in the game for a while, then you know that it's not a matter of if something like that is going to happen, it's just a matter of when. Now, sometimes people are caught on the other side of a gap, and that's always a good thing. It's always a good thing when you wake up and your position's gapped up a lot. But typically this is it's typical of biotechs. So just keep that in mind as you move forward. It's all about the FDA approval cycle.
How about that LPG? That was one of the better ones that did work out. That was a trend change lubricant, meaning you had a short float potential. Took a couple days to trigger, but it triggered later in the week and had 2 really nice days of run and a little bit of give back today. So that is really textbook for a lot of the trend change markups that we've been doing week in and week out, looking for those identifiable pivot points and then adding in the short float to try and really help it go. Yelp had one good day and then kind of put in a topping tail. So it's choppy out there right now. GoPro, the trade of the week last week, kind of did the same thing. Tried to break out and then just pulled right back. So I've been seeing a lot of that choppiness in individual names, fake breakouts, and then pulling back in. It's making this market, a little tricky to get any direction, to say the least.
That is true. Hold on, I got a little noise pollution here, so I'm going to take the opportunity to close my window. All right, so
real quick, I'll answer Waleed's question. Yeah, the value in Holly, and this goes to Patrick too, because we were having the same discussion. The value in Holly is the trade idea as it comes out in real time. That's where the statistics lie. Now, how long it's held for, how long you want to hold it for, what you want to do with it, it really becomes your baby, becomes your responsibility after the idea is generated. It's called a gray box. So the value is in the trade idea generation and the entry signal, where whether you take it the first time or it flounders around and travels back through and you pick it up on a second trade around entry. That's the value of Holly. Where you decide to sell it really is up to you. So it's not a perfect red light, green light system. That's what you call a black box, and that's never what Holly was intended to be. It was intended to be a gray box. So there's still a lot of trader discretion that has to come into play as to how long to hold the stock, maybe sell half, maybe use a more conservative stop than Holly might. It's up to you. But to answer the second part of your question, Waleed, what is risk on, risk off? Risk off is basically every exit that Holly takes is going to go into the risk off category. Like I was just saying, calculating the exits that the AI takes goes into the risk off bucket. Now, there will be days where Holly is extremely conservative. Like I said, I can't wait for the next big broad-based rally day because more than likely the risk on is going to have a really nice day. So risk on is that particular trade call from Holly, but holding it into the close and seeing how it would have done at the end of the day. So the idea is some days we have, a gap up, a broad-based rally. Every sector is participating, and that becomes you again as a discretionary trader to go, well, Holly's time clock is exiting here in 2 minutes. The market's breaking out, huge volume. Do I really want to go conservative with her, or do I want to stick around and see if I can get some more alpha? And those are the days we really try and hope for, where we have a nice, clean, broad-based rally. There's not a lot of chop, and at the end of the day, Holly's calls on risk on are significantly highly profitable than the risk-off trades.
Right. To help illustrate that, looking at this MGT chart again here, Holly, says get long here. If we look at the, that was the 5-day bounce, right? MGT, 5-day bounce right here. What's our hold time? 90 minutes. So now we look over here. She got out because the 90 minutes had expired. Time stop. That corresponds with this arrow that I just marked up right here. So Holly up here, she's like, my 90 minutes is up. I'm out. Now, if you said to yourself, okay, we spiked up here, we took a little pullback, I saw these wicks putting in, we're starting to go sideways, you might be thinking to yourself, well, I sold a little bit, I was in 200, I sold out of 100 up here, I'm trying to hold the other 100 because I think the move's not done. So, I understand Holly is getting out. She's obeying her risk-off parameters by exiting the trade when she's supposed to on the time basis. But you might say to yourself, I'm going to continue to hold this. I know Holly's getting out, but I'm going to continue to hold it because I think we might get another little push higher. You have, in essence, decided to go risk on that trade. You're staying in it. Even though Holly's getting out, you're accepting more risk in the hopes of more reward. So I hope that kind of helps to clarify the difference between risk on and risk off.
Yes, sir.
Okay, just taking a look at the time here. We're in good shape. So let me just take a look at my cheat sheet here. So yeah, last week's price alerts had a kind of a black swan event in the Alney trade. But just keep in mind, whereas Holly manages her trades with reduced risk and profit save, we have to do the same thing with these trades that we're producing from the price alerts because Holly's not there to do it for us. So in essence, we're in the Alney trade, we're in the money. When we start to see these wicks pull back like this, we need to act very similar to Holly and go, okay, well, we're getting pushes, but every time they try to push it up, on these days right here, the sellers kind of bring it back into parity. So
it's a shame. It was such a great entry. I mean, it really was. It did exactly what we had hoped it would do, but it was a damn biotech that threw us a curveball. So what are you going to do? Yeah,
but once again, it's good for everybody to see because these things happen. Overnight risk is overnight risk, and then when you deal with the biotechs, that gets amped up and multiplied. Kind of like, how a good long play gets amped up and multiplied when the pattern is conducive and it's low float and there's a high short interest. Everything can act as a catalyst in some capacity. All right, so let's do this. We've got some new chart setups to share with you guys. First, let's go ahead and get rid of all these guys.
We kind of had to look hard and long for these two. I mean, there's not a lot of grade A 5-star setups out there. Yeah, the pickings are a little slim. So We've got a few ideas.
All right, so I guess we'll start off with this one, ADPT. And I'll kind of zoom out a little bit here. But of course, this pattern should look familiar. ADPT, kind of churning around right here. What's that, Steve?
The short float is?
That's one of the interesting factors here. We've got a 71% short float in ADPT.
Somebody just asked me what some of my favorite swing trade setups are, and this is one of them because it takes into consideration a pivot point, which will identify a price alert, and then the rocket fuel of 70% short the float to try and really kick it in gear. If it's going to go, it's going to go when it has 70% short the float. So he's identifying the pivot level, that little rainbow that we've had over the last week or two. You could make an argument there that you could go back above the 45 level as well, but why not get a head start and at least try and see if we can get a running start, because they're 70% short the float. So all we do is identify our penny level higher than the current wick and set our price alert, give ourselves some notes. TCL stands for trend change lubricant, so we know what strategy we picked it off from, and then we pop in the short float of 70%. And we do that because when we go back to the price alerts, we can see, if those are all the strategies that are hanging out near the top, things that are breaking their downtrends and having short squeeze events, and those are the ones that are working, well, then we want to know about it and mark it up and see it in a way in which we can quickly identify what is working.
Now, Steve, do we want to be sticklers and use the outside of this wick here, or do we want to use the bodies of these guys right here?
I'd say use the outside of that tall wick. That's just my good feeling. Okay. Yeah. Because once it gets through that, it's going to have a little bit more room and a head start to push up through that $45 level.
Right, but I believe that's going to be 43.37.
But what it's going to do there is it's going to put the short sellers on notice. That nice red candle the 70% short sellers had a month ago, they were feeling real good. They were rubbing their palms together, thinking about what they were going to buy. But if the price continues to move higher and gets above that wick, all of a sudden, that's all gone, and they've got to reassess their situation. So we're putting ourselves in their mentality, in their shoes, saying, do I really want to stick around for a 70% possible short squeeze if I'm wrong here? And the only way to know when you're wrong is when you see the footprints in the sand start to dictate so. So the first step of letting these short sellers know they might be wrong would be a price alert that he would just set there.
All right, so that one's good to go. Moving right along, this guy's not your typical trend change because it's a little bit higher than typical.
But still, it's got 50% short the float on the last data dump. We have a nice sideways definitive level that we want to push through, a nice sideways action. The price can consolidate backwards price can pull back in price and consolidate with price numbers, or price can just consolidate sideways over time, and that latter is the better of the two. When price consolidates going sideways over time, has much more kinetic energy, much more potential energy, to turn into energy pushing through than having to pull back from a bigger distance and start from a farther pullback, if that makes sense.
Yep, so we just set it right at the right through the high of today for that one, for AGIO. And now, VSLR, I believe, is next on the list. All right, so everybody can see what's going on here, right? And then let's see here, Steve. Which little level are we gonna pick here?
Well, yeah, we can go one of two ways. We can go the early bird, or we can wait for it to clear that higher wick.
So you're talking early bird here?
That'd be the early bird, yeah, above yesterday's highs, and then that higher wick is, way above there, up at the 360 range.
Yeah, or we could even go here, for that guy right there. I don't know. I'm not a real big fan of the early bird on this one. I'd like for it to pop
I'm not
here.
either a real big fan of the early bird, so I'd like to see it get ahead of steam and
all right,
push
so
it up higher.
We'll use 37 there. Now VSLR also has a 47% short float as well.
Yeah, we're focusing on a lot of high short floats here.
As we said, we've plotted through many, many charts. I know, Steve, you probably went through 500 charts over the weekend as well.
I
and
don't
get the
know,
harsh limb.
Rob. I don't know if we found ADPT on it. Did you find ADPT on your trend change lubricant, or did that
No,
just pop up?
no,
Okay.
I had to dig through high short float stocks just in general and kind of look at
Okay.
the patterns from,
Yeah.
kind of had to reverse it because the TCLs just aren't there right now,
Yeah.
like they have been.
Okay.
All right, so VSLR, let's see, we didn't like a couple of the Wayport, but here's one that you brought up, Steve. Was it the Gurn, I believe? This
Yeah.
nice
Well,
little,
again, major caveat. This is biotech stock, and
uh-huh.
it did just take a little bit of a hammer there. But if it can get back above that low, it's got another high short float percent, I believe. Let me just get that number. Actually, it's not that bad. It's 20%.
Yeah, I think he's
Uh,
20%.
yeah, but nonetheless, if it can get through that high wick, there is some void it could travel into for a possible day trade or a day and a half. Maybe that's it.
And once again, biotech-y.
Yes. Yeah.
So, everybody needs to be aware that this is a biotech stock. Of course, it is a $2 stock, but $2 stocks can get beat up as well.
But it looks like it did its biotech 3 thing above 3 there when it was looking good.
Right, right.
So maybe the worst is behind it. TCL, trend change lubricant. So it's a trend change, and we're trying to find the weak spot to get it through, break the downtrend, and move higher. And then, of course, the short float percentage is our rocket fuel. If we can find those are the ones that can tend to move.
Yep, so I think that's about it for the picks. Four new chart setups for the trend change. ADPT, AGIO, VSLR, and GERN, and I believe that is it.
Okay. I'll get ahead of myself. If you want to put up Vive was the trade of the week, and I'm a little disappointed in the way it closed today. It did exactly what I thought it would do on the open. If you go to the daily, yeah, there's the nice open. There's the nice run on the open. There's our washout bounce candle after a really nice uptrending stock in 6 or 7 days of negative. You got the sellers and the buyers that probably just said, "Uncle, I can't take it anymore. I'm going to put my stop in below that gap." Stop got ran.
Mm-hmm.
Really nice open on today, but gosh dang, it did what I'm calling it the propeller hat, because it put in a reverse washout bounce candle back to back, one down and one up. Looks like a beanie hat with a propeller on it. So I would have loved to have seen that close near highs. I'm not a fan of the way that closed, but it did get off to the right start. But therein again is another example of trying to use the washout bounce for a more safer entry after 5 or 6 days of pain. Try to play on the pain of other people. So,
okay, so
honorable mention there. Yeah.
Let's see. Before I forget,
Got to share.
I will go ahead and pop these into the chat area.
Now pay attention slowly here, guys, because this is what you guys are going to be doing when you share your 5 price alerts with us for the contest. Jamie just highlighted the 4 that he wanted. You'll want to highlight the 5 that you want. You'll right-click and share those 5. And then you'll go into the save and share, so you can share and copy all. We'll put it into your clipboard, and then you'll just drop that link into an email, info@trade-ideas.com with the message header contest or something along those lines. But you'll see a lot more emails coming forward giving you the instructions on when and where. It's going to be due Wednesday evening on the 19th. So we're still a few days away, but it's just a head start on those of you that want to participate, how you're going to submit the
Yes, sir.
and you're popping that. Did you pop that in the chat window? Excellent.
I did. So that cloud link is in there now. So just those of you with the higher functionality, you just copy that cloud link, highlight it, copy it, and paste it into your price alert window.
We have earnings season coming up. It's very important to keep an eye on your single stock window, which can give you the earnings date on many of our. Let's just go ahead and show them how to do that. As we get close to earnings date, I get into the habit of making sure you don't have to worry about earnings coming up. So if you haven't configured your single stock window to have the earnings date, we're coming into earnings season, it might be a good idea to do so.
That is true. Earnings are upon us. And I believe now, it's 10 till, so I guess now's a good time to bring in Scott. Scott's got some
All right.
some special discount codes for those of you who are not subscribers but are thinking about it. Whenever you're ready to make that commitment, Scott's got some nice discount codes for you. So Scott, if you're there, we're ready for you, buddy.
Yeah, thank you. Just a reminder, the webinar is recorded. You can watch the whole thing in its entirety again later tonight or tomorrow morning. You'll get an email about that by tomorrow. So if you go to trade-ideas.com/price and use that code you see there, AI Trades, you'll be able to save 15% off your first month or year of premium. And that's really the best way to go. But if you'd like to get on to standard, you can use the same code and save 10% off your first month or year of standard. And remember, even if you're just picking up that $99 a month per month for your first month of standard, that also includes a full hour of one-on-one training, just like the premium does. So the primary difference between premium and standard is, of course, premium has access to the AI as well as advanced features like unlimited backtesting and your price alerts. You can also download a PDF, and I just want to go ahead and highlight that to you. It's in the handouts section. Click on the little plus next to the handouts panel on your GoToWebinar interface, and that'll open up a box where you can download a PDF that has this slide and the contact slide and a slide reminding you about joining the open house October 17th to 21. And you can get to the open house by going to trade-ideas.com/open house, lowercase. That'll get you right there, and just go ahead and sign up if you're not already a premium subscriber. This is open. The open house is a great way for you to try out premium, even if you're just a standard subscriber, or if you're not subscribed at all, go ahead and do that. It's just $8.88, and that covers your 5 days of premium. You can sign up anytime between now and October 19th and get 5 full days of premium access. We recommend registering before October 17th because the trading room and our webinars during that week will be focused on helping the open house attendees get used to Trade Ideas on board and get the most out of their 5-day trial. Of course, Steve already talked about the contest. Anyone that registers for the open house will be getting contest invitation instructions to their email before the deadline, and that'll also show you how to submit the cloud links, just like Steve demonstrated during this webinar. Thanks everyone for joining us. Go ahead and shoot us an email at info@trade-ideas.com if you have questions, or you can contact Steve or Jamie. Thanks everyone for attending. Thanks guys. Yeah, right there's Jamie's email and Steve's email on your screen right there. You can also follow Steve online on Twitter at TodayTrader or Jamie at QuantBot, or our CEO Dan Merkins at TradeIdeas1 on Twitter. We also have Trade Ideas and some other Twitter accounts. Facebook.com/TradeIdeasPro is where to find us on Facebook. And if you like us there, you'll see some unique content. Thanks all for attending.
All right. See you next time.
Thanks, everybody. We'll see you guys next time.
Yep. Later, guys.